I'm not going to be buying stocks and thinking that I'm the smart one who caught the bottom. The market has crushed that aspect of my ego over the last 30 years.
People
Yeah.
would rather be right, hopefully right, than just eat the small loss. That's the issue, though, I'm saying.
If you do that, I believe you're using technical analysis incorrectly.
You're very humble. Even listen to the way you describe making money. You say, instead of like, I'm a profitable trader, you go, I make money on balance. That's how humble you are, Brian.
It's not that I don't respect other people out there and I don't follow, some people on Twitter, but I don't listen to anyone.
Traders, we're back, part three with Brian Shannon. This version of Brian Shannon has a sick goatee, so I think this is going to be our best episode ever, Brian. But how you doing?
Doing good, Austin. It's been 2 years, you told me. Man,
I
it
know,
just
man.
seemed much more recent than that.
Time is flying. Like you said, the kids are getting old. We're getting old. I think, dude, I think I'm starting to recede the hairline a little bit. So I'm going to be like you soon. I'm fucking worried about it a little bit, but we're getting through. Let's jump in, Brian, because people want to know your take on markets. And
Right.
first, congratulations on the Stock Twits Award. I saw that this morning. That's
Yeah,
awesome.
thank you.
You
Yeah.
do a lot of good work with them. I try to retweet that stuff, even though a lot of my guys are like futures traders, because as you know, a lot of the correlations can be made if you understand what you're looking at between SPY and
Yeah,
ES
of
and things like
course.
that. So, what is going on, Brian? Is this bearish move from tariffs going to be sustained? Give us your wisdom, give us your opinion.
I leave that up to the market. My opinion is just as valuable as the 10,000 other opinions you can read or hear anywhere else. So I actually don't give an opinion on it. As I told my subscribers yesterday, the only thing you're going to hear me talk about the tariffs is one, we have that anchored VWAP from the tariffs. As long as we're below that, the market tells me we have net sellers from that event. The market doesn't like it. The market hasn't liked it. We're below the anchored VWAP from the beginning of the year. We're below a declining 5-day moving average. This market is simply guilty till proven innocent. It's not up to me to decide international trade policy. I don't know anything about that. I'm not going to pretend to be the expert. These are all just distractions to price, and only price pays, as you know. I've even trademarked that phrase. So I can't let all this stuff and all the opinions and all the news and rehashing of everything get in the way of me objectively looking at price action. And that's why we use the anchored VWAP, because it is 100% objective who has control from any point in time.
That's why I always say to people it's better than an EMA because I get a lot of people that are
Oh, yeah.
trading EMAs now, like I used to before we spoke, and it is way better. The term two, only price pays, I love that. And you also, when we spoke before, talked about the cocktail talk. That's what this is. Like we can sit down and have a drink, smoke a joint, talk this stuff about where's the market maybe going, but does it actually make us money? And I think that's a huge thing. And just like me, I'm sure you have days where you get caught on the wrong side of the VWAP, get caught maybe trying to fade the move when you shouldn't. How do you stay unbiased and trust VWAP so much? Because I think we, like I said, sometimes succumb to it. But imagine like a new person to VWAP. They're not going to trust it as much as we do. So what would you say to that?
The VWAP includes price, volume, and time, and it
Okay.
tells us the true supply and demand from any point. It could be from a low that we made 15 minutes ago. If we see a low in the S&P 500, the futures, the SPY, whatever you're looking at, and we start to rally a little bit, let's say we rally a point and a half in the SPY or 15 ES points. We ran up 12 ES points, pulled back 3 points. If we find buyers at the anchor from that low 15, 20 minutes ago, what I do is I put a provisional anchor on that and say, well, we bounced pretty good from here. I don't know if it's significant or not, but if we're bouncing, I want to measure that. If we instead, hold along it and then it starts to break down below it, it tells me that the average person who bought from that low 15 minutes ago, 15 points ago, is now losing money that What are they going to do? They're likely going to sell. What about the short sellers? They realize, hey, now the average person from that point is losing money. Let's gun this thing lower. Let's smash some bids and see if we can create some fear. So it's a matter of just understanding that it's the true representation of supply and demand. An EMA or an SMA, those are time-based averages. Time is one of the components in the market. Price, only price pays. Volume tells us the emotional intensity or commitment level to a move, and time tells us since this event, since the Federal Reserve announcement, since the earnings report, since the tariff announcement, since the election. These are all things we want to objectively measure and say, okay, as we approach, let's say we approach the tariff VWAP from the underneath. Let's say we start to rally, and it's pretty significant now. That's up at 5,400, 5,380, and we're at where are we now? We're at 5,170. So that would be a significant bounce. If we get up to that level, I look at it and say, okay, here's our level of interest. Let's see how the market responds in this general area. If we start to see sellers take control, then I want to see, are we below the daily VWAP? If so, let's hit this thing on the short side because we've got a bigger time frame level lining up with a shorter term time frame. Now's the time to take the risk, but then say, where's our stop go? Well, that little lower high from 15 minutes ago, that might be the place.
That makes sense. When two questions follow up on that, we're going to go right down the rabbit hole for a second.
Definitely.
The comment about it plays with the VWAP. I think this is one of the discretionary things that, like, again, people maybe that are just new to VWAP struggle with. They expect the VWAP to be held with a pin, exactly, or the candle would close on it, exactly. So do you have any tips on like just building your discretion around understanding, is a VWAP taken or is a VWAP maybe just being played with? Hey traders, real fast, I want to take a break from the podcast to thank our two sponsors for today. As you probably know, Top One Futures just launched. They've been a sponsor of the podcast for over 2 years. They've been a successful CFD Forex prop firm, paying out over $2 million and going strong. So to see them come into the future space, I'm very excited. And so far, the reviews, the feedback has been fantastic. So we can save you 50% on any challenge. Just use the code ASFX at checkout at topOneFutures.com or with the link below. Edgeful is our second sponsor of today's episode. They have been an extremely powerful resource for myself as a trader and for my community. Today, you can use the link in the description to this video and get a 7-day free trial to Edgeful. Try the gap fill stats, try the opening range breakout report, even check out the initial balance report. Those are the 3 I would tell you to start with. But there is a ton of information on their website. So use the link, get the free trial, and check it out. It's going to help you find an edge in markets, I promise, starting this week.
Yeah. So, yesterday was Thursday. We sold off 5% or so. And, we had a decent bounce. We had maybe a 1.5% bounce intraday. And I saw people saying, we bounced from this level. And I said, slow down. That's a bigger level that we're still in a downtrend. Just because we touch it and get a little bit of action doesn't mean it's support yet. We only know support or resistance well after the fact.
Sure.
But we want to take a look at it and say, okay, it hit this bigger level on a very short-term time frame, but we're still below the 2-day VWAP, the 3-day VWAP, the 5-day, the 10-day, the 100-day, the 2-year VWAP, right? So, this is a much bigger trend. You can't get excited about these little blips in a downtrend. So the way I wrote about it in my book is it's not a place to do business. It's a level of interest. Just like a 50-day moving average, just like a Fibonacci retracement, there are levels that we use as technical analysts to do what? Not to say, hey, I'm going to automatically buy there. If you do that, I believe you're using technical analysis incorrectly. What we want to do is we want to look, so we're hitting the 5-day moving average. We come down and we touch that. Well, let's just say we're touching the week to date volume weighted average price on a Wednesday. And we, touch it from below, meaning, the market's been in a downtrend. We rally up to that week to date volume weighted average price. It doesn't mean I'm going to short the market right there.
Okay.
It means let's look for evidence that the sellers are taking control, because while the week to date anchor often acts as resistance in a downtrend, it the key word is often,
Right.
tends to,
Right.
not always. There is no always in
If
life.
only
In life,
in
why would
life.
there be in the market
Right.
where the greatest uncertainties are revealed?
So really what you're
So
saying is I'm sorry to cut you off, but
yeah,
it comes from the trend, pick and almost convicting yourself to the trend of what those higher time frame VWAPs, the 1 day, the 3 day, the 5 day, they're telling you we pulled to whatever VWAP that you're using, the trader as a key VWAP. Now trading in that trend doesn't mean we just jump in there, but when we start to see it turn, that's when you kind of apply your discretion to say, okay, I think this may be a level where we've maybe set in a lower high. Now let's use it and move away from it. Is that what you're saying?
correct. So we
Okay.
might be up against the Wednesday on Wednesday. We might be against the week to date volume weighted average price,
Yeah.
but we rallied. I just talk in terms of SPY because that's what most of
Yeah.
my subscribers look at.
Yeah.
So we rallied 2 points to get there, 20 handles.
Yep.
So we're well above a advancing VWAP for the day.
Sure.
So today's trend is
It's up.
higher.
Right.
The trend for the week is lower.
Right.
We have mixed messages on different time frames.
Yep.
The shorter term time frame is nothing more than the sum of the longer term time frame is nothing more than the sum of a bunch of shorter term time frames.
Right.
So this short term trend might just be one of those lower highs in the bigger downtrend.
Exactly.
That's the way I look at it. Say,
Yeah.
okay, so we're at this level where we often find supply. So I'm not going to take action, but I'm going to watch closely. If we hang out there for 45 minutes, 50 minutes, and the daily VWAP starts to catch up with it, and we start to cross above and below it, then we make a lower low below that VWAP, then boom, that's where you want to short. It tells me that the weekly sellers have defended this level. Now on the shorter term time frame, on the daily time frame, the average long participant is now losing money.
Right.
What do you do when you lose money, Adam? You're
You got to get
disciplined.
out.
You get out. Not
Yeah.
everyone's that disciplined, right?
Right.
And they're buying the
You
dip
get
and they
out or you get
continue to
blown
buy dip.
out.
Right, exactly. So what do the short sellers do? They say, "Hey, we're now in control.
Yep.
Let's press this thing.
And we
Let's
know
make
how
these
that
people."
happens.
Yeah.
Escalator, or what is it? Elevator down, stairs up. So it'll slide, right? In a
Yeah.
situation. And that's what we've seen this week where some of these expanding moves.
Yeah, this was the elevator shaft this week. I mean,
Yeah.
it was just real, I mean, beautiful
Okay, so
downtrend.
now zoom out cocktail talk for me a second. When we
Yeah.
slide like this and everyone gets fearful, you have so much experience in markets. Just for a second, isn't that when we start to smell a bottom? When everyone is like, "Oh my God, the world is ending." This is like you have to have some discretion, Brian. When you're sitting around, you're like, "I feel it. Like it's on CNBC, it's on the Twitter. Everyone's super bearish. I think there might be a bottom." Do you ever get inklings like that?
As I told someone this week that, last Sunday, I was bearish in the Stock Twitch show I did,
Hmm.
and everyone, not a single person asked me about selling short a stock. They were all interested in, hey, should I buy Tesla? Should I buy Palantir? Should I buy Amazon? How about AMD? And AMD just keeps hitting its new lows again,
It's crazy.
over and people have been asking me that, AMD for the last year and a half. It's in an established downtrend. So the point isn't to, talk about those stocks, but I told people that, as soon as people start asking me, hey, what do you think about shorting this stock? What do you think about shorting that stock? Then we're probably getting near there.
Got it.
And
Okay.
I'm not getting those
We're not getting it
questions.
yet.
And we're
No, because
hitting a
I
new
think
low right now as we speak. I
and
mean,
people think
it's
this is a dip, right? So people and you are the king. Don't buy the dip, wait for the VWAP to be taken. So like investors think this is a dip. And I think what I'm seeing, traders thinking that they're investors, like, "Oh, I'm going to start building my long-term portfolio. I'm getting a good." They don't realize how long it could take to go to new high, to back to all-time highs. As you've lived through the markets, like I said, you've been through periods, 4, 5, 6 years where ES SPY has not made new highs, correct? In the early 2000s, 2001 to 2008, I don't think there was a new high. And then it crashed again in 2008, right?
Yeah, and even more recently, I mean, everyone wanted to buy in late 21, 22.
Right.
And if you just go back and look where we are structurally, and it all begins with that. Long before we add VWAPs, you have to say, how does the market work cyclically? The four stages that Stan Weinstein came
Yeah.
up with. Stage one, accumulation. Stage two, markup, an uptrend of higher highs and higher lows. Stage three is indecision. Stage four is we break the lows of stage three and we're below the declining moving longer term moving averages, making lower highs and lower lows. Well, guess what? That's where we are now. There is no evidence that the buyers are stepping in. You're going to get some good dips. I'm sorry, blips
We
really.
get rallies because some of the
We're
biggest bullish days are during bear markets, but that
They
doesn't mean
certainly
it's
are.
over.
Yeah, and look at all the rallies in 2021 and 2022 as the market was in free
Oh,
fall.
there were
There were
15,
20,
oh, right.
30%, yeah,
Absolutely.
20% rallies.
Absolutely.
But look at the declining 200-day moving average. That tells you the average institution is still a net seller of stocks, and they're going to liquidate as it gets up towards those levels. The sum of the declines is greater than the sum of the rallies
Then
in
where
a
do we go?
bearish environment.
Right.
And so it's easier to make money. It's not easier to make money in a downtrend, I don't think.
Why?
Well, from a swing trader's perspective, because on an intraday basis, that's where I like to short the most is day trades. But from swing trade perspectives, what we often see is, you've got a great short, the market's down 3% for the day, you decide to hold it overnight. The next morning it gaps up 2% and it runs another 0.25%, blows you out, and then it ends up down 3% on the day. So there's just a lot more of that false move because everyone gets excited. Shorts get
That makes
scared. They
sense.
start to cover.
That makes sense.
So, anyways, going back to it, Adam, is that Austin? Sorry,
That's okay.
I was just talking to another Adam.
No, no.
Anyways, those mantras of buy the dip, buy when there's blood in the streets. There's been blood in the streets for the last 2.5 months. That's not a trading strategy. If they don't scare you out of the market, they will typically wear you out. And, the bottom of 2021, 2020, I'm sorry, 2022, 2023, it was, sideways for a good 9 months before we started to see the buyers really took control. So most people probably should have large cash. They
Cash.
don't.
Right.
They
They don't.
don't because
They
they've
don't.
been buying the
They're
dip
buying.
because
Right.
that's what they've been trained to do. They've been trained wrong. Ironically, who has the biggest cash pile right now?
Warren,
It's
I was just going to bring that up.
it's kind of interesting,
It's
right?
very interesting, right? So what do you make of that? Because like we would know based on their filings that they have to do when he starts to buy, and he's not buying. He's not buying this dip, so he's probably listening to you, right?
I don't think he's listening to me.
He's listening
Hopefully
to
he's listening to the market
he's
and he's
listening to
listening to the
VWAP, right?
fear and
Because
he's
like
listening to
you brought up that I bring up the story from the book.
yeah,
Everybody, if you haven't read the book, where Warren Buffett, the big guys can get guaranteed VWAP. Everybody, so they know what their guys know what's going on here, right?
yeah, absolutely.
Absolutely.
I mean, he's not a technician, but his
No.
traders have to trade according to the ways to get the best price.
Have you ever heard
That's
like the
feel
dirty
based.
stories about Warren Buffett that he like trades a small account on the side and like will fade his own positions? Have you ever heard those stories?
No, are those
Okay,
rumors
I don't
out
know if
there?
it's true or not. We'll have to go down a rabbit hole on Google or ChatGPT one day. But I've seen rumblings of like videos and people like saying it's true that like he'll have a small, small for him account where he can do more smaller trades, not the big trades like you talked about in the book. You know what I mean? That wouldn't
Right.
surprise me though. You know what I mean? You can't take the what do they say? You can't take the dog out of the fight or whatever it is. You know what I mean?
Yeah,
Yeah,
yeah.
for sure.
Um, it would be really interesting to know that.
That would
And,
be interesting.
we all sometimes do things we tell others not to do. I will do it. Sometimes I'll say this has to be the low and I buy some, but I don't want to drag other people into that with me
Right,
because I'm usually wrong.
right.
And if I am wrong, I'm going to get out pretty much immediately and say, boy, was that stupid. Why is human nature like this, that I still do this sometimes? But
100%.
the good news is that, when I do it, I've learned my lessons and I'll move to the sidelines really quick.
100%. You mentioned Sam Weinstein. So one of my questions I had for you, you mentioned his books, John Murphy's books. And those are like resources you can just pull up anytime. Anyone today, because I know you do the work with stock twits, but
Mhm.
like who are you listening to for narrative? Who are you listening to for just good information today? Is there any other resource you could share that's been really good for you?
I honestly, I just trust my process. It's not that I don't respect other people out there and I don't follow, some people on Twitter, but I don't listen to anyone in particular, not one person. I say it all the time. If George Soros came and whispered in my ear, "Hey Brian, we're going to be buying tomorrow," I'd say, "That's cool. Let me watch the market and see if there's any evidence of that."
For
I
sure.
trust the market. I trust price action because I've trusted people, analysts, other people I've looked up to in the past. And then when I lose money, I hate myself for it more than if I lose money on my own terms. And most of the time, you can't believe other people. trust price. Only price pays. That's why I have that mantra. That's why I say it all the time. That's why I trademarked it, because I remind myself of that. Anytime I start thinking, and I just did this recently with Southwest West Airlines, about a week and or I'm sorry, no, it was today's Friday. So on Monday, I started buying a little bit of this because it had pulled back a little bit. It was still below the declining 5-day moving average. And I thought, well, with this baggage claim fee, I did some fundamental analysis.
They're
And,
about to make a killing.
right, they are. They're going to add
Yeah.
$2.53 a share in earnings on just based on this free money. It's going to go straight to the bottom line.
Yep.
The chart has this longer term stage one accumulation on the weekly chart. It was starting to break out. So I bought some of the dip. I bought really small. And then the next day, I bought a little bit more. And I told my subscribers, I'm probably going to get what I deserve for doing this, but I can't resist. If it moves without me, I've got to be in. Wednesday, I blew it out because I'm sorry, yesterday, Thursday, I blew it out. I said, you know what? I got exactly what I deserved. I lost 60% of my premium and my options. And it was a small position, but I just felt like, well, the risk is not being involved. If it goes without me, I'm going to regret it. But now the calls are probably worthless. It's down another,
Right.
I
So
don't
it's
know,
better to
whatever
take the hit
percent
there.
today.
Absolutely. What's your
Yeah.
trading like now, day to day? Have you shifted at all? Less swing trading, more position, like more day trading, or more position swing trading, less day trading?
No, no position trading at
Okay.
all. I'm not going to be buying stocks and thinking that I'm the smart one who caught the bottom.
Got it.
That, the market has crushed that aspect of my ego over the last 30 years. And that's a good thing,
Yeah.
right?
Yeah.
If you have an ego, you're going to get crushed.
Yeah.
And anyways, so I am mainly day trading in here. It's the only way that I can control risk in a way that I'm comfortable with.
Sure. Options mostly.
No, no, no. Day trading,
You're
I,
doing
I like to trade the triples,
I
the
was
the
going to say, I
triple.
want more information on the levered stuff here because I'm very
Yeah.
interested, but I'm not educated in it.
I'm not really doing much in options. I've done a little bit, but I've slowed those down because the premium is too high. When the VIX is at 48 or whatever,
What
I
is it
mean,
today,
there's
right?
just you're not gonna get the juice that you need there. But you know, S triple Q, T triple Q. I'll go with those. And I'll trade them in my IRA. I trade very aggressive, most aggressively in my IRA.
Which is what I think a lot of people should do, right? Because it's a tax advantaged account. It's where you're getting the most benefit.
Where most people probably shouldn't, unless you're profitable.
Okay,
If you're
tell me why.
profitable, if you're profitable, you're shielding that tax advantage.
But you're
But
if you're a
if
loser, you're
but
going
if
to say
you're
you can't
losing
write them
money,
off.
you can write them off. Right. So
Got it.
I tend to make money on balance. And I like the leverage in there. I can day trade the hell out of it. Think or swim. There's no restriction. If I've got a $500,000 account, I can trade $50 million worth if I want. So I can be in and out with size on those triples. And really, stuff can add up. And for whatever reason, it's just the strangest thing. When I've opened futures accounts in the past, the math just doesn't make sense somehow. I just can't find success trading futures.
That
It
might
used
have
to
to be
frustrate
part
the
four,
hell out of
Brian,
me.
where we convert you over to futures for a second and see if you like it. A lot of like the other, I feel like guys your age that I follow and have tried to connect with, they trade futures. So I feel like you're like I know from talking to them, you're like one of the only ones that trades the levered assets like that, which is super
Yeah.
interesting because I think a lot of people thought those levered assets were for investing, but after doing a little bit of research, they're not really meant to be bought and held. They'll take
No.
80% drawdowns. Like they could be
Yeah.
rough, right?
Yep.
Yeah. So you
Yeah.
day
It's
trade.
it's the it's the compound interest effect.
Right.
So, it's meant for daily returns, and they're very clear about that. If you look at the SPY versus the triple long, you'll see that they decline, of course, at a greater rate, but
Right.
they don't advance on
At
a
the same rate.
day-to-day basis,
Right.
but they don't keep up.
Yeah. During the grind, like they'll lose money where the market may stay afloat too. Yeah.
Yeah.
Definitely different. Okay. I want to get into screen share too. A couple more questions for you before we do that. Red
Okay.
days are like very common for a lot of your audience, my audience, but
hmm
I notice how few people handle red days really well. Can you speak on the importance of losing small rather than blowing out, and maybe give any tactical tips as you have a lot of experience, we all know. How have you developed that skill of being a good loser?
Just by getting my ass kicked so many times and realizing I don't like it, I'm going to stop walking down that block because that bully is standing there waiting for me and he's going to take my lunch money. And you know what? It's easier for me to change my direction and go around because I'm not going to beat that bully up, not the market bully. I'll go fight the guy who's trying to take my money, but
Right.
this isn't the guy to fight, the market. It is, so I hate losing money. I don't like losing at all. I don't like losing in sports. I don't like losing in activities, but board games. I don't like to lose.
I
I'm not a
feel,
sore
ask my
loser,
wife, I
but
feel you on that, bro. We're
yeah.
the same.
So, losing money sucks. I
It
want to
does.
do everything I can to avoid that pain.
But people
And
would rather be, I didn't mean to cut you off. People
yeah,
would rather be right, hopefully right, than just eat the small loss. That's the issue, though, I'm saying. You know what I mean? Like
it
you have
is.
the experience now to say, like you're very humble. Even listen to the way you describe making money. You say instead of like I'm a profitable trader, you go, I make money on balance. That's how humble you are, Brian. So like you have to remember a lot of these other people will not, I mean, you see it, they're in your community too. They will not just admit, yo, I'm wrong. This was a stupid idea. Get out. They move stop loss. They hope. So that's what I'm saying. Like, do you ever give anybody tips of like trade smaller? Maybe trade this not
All
for
the
you.
time.
Okay,
No, no.
okay.
Actually, for the last couple of months, I've been saying, listen,
Size down.
we're in a bearish environment. Call it a bear market, Carol, or whatever you want. But you reduce risk. You have tighter stops, or you reduce your share size and have lower expectations. 6 months ago, it was so easy to make money on the long side. That is a different environment. And the market told us we're in a different environment
It's true.
because it started dropping, making lower highs and lower lows below declining moving averages. And when a trend is established, it's more likely to continue than it is to reverse. Just the basic, definition of trend. Lower low highs and lower lows is a downtrend. Look at any chart out there, and that's what you see. You see a pattern of lower highs and lower lows. Why are you surprised when it goes down another day and another day? The market is doing what it's supposed to do.
Right.
It's supposed to go lower in a downtrend.
Right.
That's the way markets work. That's the way trends work. So get in alignment with those trends. And if you can't do it, then just sit on the sidelines and cash. Don't lose. You're going to be well ahead of most people.
Do you think people my age are spoiled because we don't know what a 6, 7 year period of no new highs in the indices is like? Like if you're like me and you've only really been paying attention to markets since like 2015, 2014, you don't have that multi-year like we kind of talked about a little bit before. That biases you to think every dip recovers and we go up. I wonder if we do go into one of those longer periods without highs and how that reconditions people's way of thinking. Don't you agree? Like the kids are spoiled, right?
Well, I mean, they got spoiled and now they're realizing the consequence of that is that it's not easy. The market is not easy. And they thought it was, so they got spoiled in that environment. But the chickens are coming home to roost right now by saying it's not that easy. And you're going to have to learn this skill called risk management if you want to do this longer term. Because you look at any period in history, we have 10, 15, 20% drawdowns almost every year in the market. And
True.
if you're getting leveraged buying the dip, not buying strength after the dip as it starts to move higher. If you're buying on the way down, averaging in, you're eventually going to get blown out. And, here's what I say, Adam. I just spoke to an Adam, like I said.
Okay.
Sorry, Austin.
That's okay.
Is that you get what you deserve when you buy stocks in downtrends. And some people think I'm being a jerk by saying that. And I'm not because every big loss that I've taken, I've deserved it. And I've done it by breaking my rules and thinking that I knew something that the market didn't know, or just being plain stubborn and saying, well, I can buy more. I can lower my cost basis to this. I can lower my cost basis to that.
Yeah.
Now I just need it to go here to break even. And then it gets to break even. Do you sell or do you like, oh, now I got it, right? So those are the things that people have to fight and learn. And unfortunately, you have to learn the hard way. I had to learn it the hard way. Most people I know have to learn it the hard way. You can tell them over and over again, like I do. Don't buy when it's below a declining 5-day moving average.
But Brian, I saw
And
this tweet and it's telling me we're going to pop tomorrow. I have to buy it.
I know, and the Twitter is such a cesspool.
It
You
is.
know, the things that so-called technical analysts are saying out there, they're
Crazy.
saying we're at support, we're bouncing here, we're at a potential level of support because in the past, we've seen demand overwhelm supply at this area. So let's look for that evidence again. But if it just continues to go lower, things in the person I was talking to, named Adam, actually was quoting someone who said something like, "It wasn't buy when there's blood in the streets," or "Oh, when you want to buy, it'll be too late," or something like that, or you,
That's
you
true.
will have missed your
I've heard
move.
that quote, right? If you'll right, if you miss it. Yeah,
And,
yeah.
and and I said to him, I said, you're a CMT and you have clients that you manage in a money management business, and you're trying to, and he says, I brand myself as saving you from the average money, RIA. I said, that's a line that they say. Buy when there's blood in the streets. That's not a strategy.
Right.
It's just something that people say. There was blood in the streets 2 months ago when we hit 22 on the um, greed and fear index,
Yeah.
and people thought, "Hey, wow, this is the lowest it's been in a year. It's got to be a buy." And we're down 12% from that level. That was fear. They were buying fear. Well,
Absolutely.
what do you call today? I saw the VIX was at, the greed and fear was at 8 or something.
Yeah.
These are not buy signals, just like seasonality. Just because 8 out of 10 times, the market went up after the election on the 23rd week of the, second year in the cycle, that's a time of interest. Say, okay, the odds are pretty good in there. But if prices keep plunging, well, that's a stupid strategy to just buy there. Wait for evidence. It's a time of interest versus a level of interest that's price based.
Yeah. It makes perfect sense to me. Do you ever take a break, Brian? Do you ever take a day off?
I do. I took 2 off this year.
Two this year. Good for you, buddy. I asked that I am being serious because I had this thought and I want your input on it. And then let's go do our screen share. Um, when traders are running hot, what happens? Overconfident. And then what
Right.
happens? Tilt. Bad, bad. Because then they can't be wrong. Like you said, moving stops, adding in, doing everything we shouldn't do. That stems from sometimes overconfidence because they run hot.
Certainly. Yeah.
So I'm thinking we should be talking about telling people to take breaks, not just when you're cold and you suck and you're frustrated. Of course, take a break then when you're learning, step back for a week. But I also am starting to think we need to tell people to do it when they're doing well. Take a couple days off. Stay like that equilibrium is really the way I'm kind of visualizing it. What do you think of that?
I take a lot of half days too.
Yeah.
So those kind of
They add
go
up.
unnoticed, but yeah, I mean, especially, I'm a little bit older than you and I've been doing this long. The market's going to be there tomorrow. And whether I miss an opportunity today is not really my concern. And that's another one of the phrases I like is missed opportunity is better than lost money. So,
Love
and,
that.
and that's what drives the FOMO buying, that, oh, this has to be the bottom. I'm going to buy here. Oh, there's blood
Absolutely.
in the streets. I'm going to buy here. I've been told BTFD, but why do I keep losing money this time when it happens? Because this time it's not a dip. We're in a downtrend. So yeah, you've got to keep that mental balance. You've got to, I know you go to the gym midday, and you've got to keep that physical activity level and your brain activity up, and not be coming in hungover or with not enough sleep. Those are all this is a performance sport. So we have to treat it as such, and take it seriously, because if you don't, you're just going to get your ass handed to you.
Well said. Where do you go to find those trails? Because like where you ski, there's no one else skiing. So what are you doing? Is that backcountry? Everybody wants
Yeah,
to know.
yeah,
Yeah.
exactly.
So what do
Yeah.
you do? Do you hike in there with the skis and then ski down? Is that the whole
Yeah,
thing?
you put these big stickers on the bottom of alpine touring skis, they're called AT skis. So
Okay.
they're big stickers that are called skins. They stick
Okay.
to the bottom of your ski. Your heel lifts up, and as you go up hill, Like you slide forward,
So
and
you
the skin keeps it from sliding
sliding backward.
backwards,
Ah,
right? So you kind of like shuffle up the
and
mountain.
that's how you get up. So you don't even have to take them off
Well, you take them off at the top
and then ride it
to
down.
remove the skins and adjust your binding so your heel is locked in,
Yep.
and then yeah, you've got the place to yourself.
Dude, see, now I understand a little bit more. I pictured you with the skis on your back. You know what I'm saying? Dogs following you, hiking up this mountain to ski down that untouched snow. That's what I
Yeah,
picture.
yeah. No, I mean, so hiking is a lot more difficult because you're going to
Oh,
fall
yeah.
in through the snow,
Right.
or this, it's kind of like a giant snowshoe because it keeps the weight distributed across
Right.
a larger surface of the snow, so you don't sink in, and you've got the traction to go up. I brought Jake up there once,
Yeah.
and he was going to just walk up in a snowboard boot, so I gave him some snowshoes. And even then, he was having trouble, keeping up. So it's really an effective way to get up the hill.
Can you share a scary story? Because I've seen these guys fall into the crevasses. Do you have any crazy stories like that, bro, where they get like stuck and have to get out with a rope? It gives me anxiety thinking about it.
No, I've seen those too, but if I started backcountry skiing at a younger age, I might not even be here because my risk assessment was not good back then. So I'm pretty conservative.
Okay.
There's general guidelines, so 30-degree slope generally will not slide. Something above it might. So I stick to a 30-degree slope, which is like it's like a nice blue trail
Yeah.
on the mountain.
Yeah.
And I have an airbag. I've got a beacon, radio, a satellite. I
Nice.
carry all kinds of
That's
stuff up
good.
there
All
for
right, good. We can't be
safety. And
losing Brian on the mountain. Big rescue party coming out for you.
nah,
VWAP.
no, I don't want to die doing what I love.
No, no. I mean that is one of the pros of living in Colorado is like you guys get the best outdoor stuff. Best outdoor stuff by far. But let's get into some screen share, Brian. So we're going to pause for a
Sure.
second and we'll get that turned on. Perfect. All right, Brian, let's get into it. Spy, give us the breakdown here. This is what you were tweeting about this morning. I know everybody probably saw this because I shared it. I really liked your take here on the retest at like fifth. What is that, 570 for you? Yeah, yeah.
Yeah. Oh, back there. Oh, so let's talk about that one first because this was one actually, I was talking about the Russell 2000 and I showed a chart a couple weeks ago about the 2021 high in the Russell 2000 and how it rallied precisely to the anchor from the previous high and then just got the snot kicked out of it.
Yeah,
And
look at
right
that.
here, this is the all-time high on the SPY. Now, it doesn't look the same on the futures, so we've kind of got to use both of them sometimes, which is frustrating
Okay.
because the contract rolled over, at about I don't know about a week and a half ago, right?
Correct. Yep.
So if you look at the current contract, the anchor from the all-time high looks like this on the futures.
So it looks
But
like it didn't make it there.
correct, yeah. But so on the SPY, I mean, you just can't make that up the way it nailed it there.
No.
And what is this? This is our anchor from the low, the prior low, that is, and our, not the month to date, but
Pretty
our
close to
week
it.
our week to date
Yeah, pretty.
volume weighted average price. So we started out this week. We had buyers, higher highs, higher lows, and I was day trading the long side in here. And then the tariff announcement was due after the close this day. We had a declining 5-day moving average, so I said enough's enough. I'm moving to cash. I don't care if it gaps up to 600 because it might as easily just gap down to 550 and or five, I didn't say 550 but gap down basically.
Sure.
So missed opportunity is better than lost money in
Definitely.
here.
Yes.
So I wasn't going to hold a profitable position and let it do this. And then, I'm dealing from a position of strength first thing in the morning. I'm looking the same. I'm in cash. I don't have to worry about this. Let other people panic. That's
Love
that's
that.
their job. So, switch down to a shorter term time frame. This is yesterday's anchored VWAP, and we got above it briefly and I didn't trade it. I was looking at it saying we're below the 5-day moving average. We've got this news. Instead, I got involved right over in you saw the diagram that I drew.
Of
Right
course.
here, I drew a diagram that looked like this and said if we do this, then here's a short opportunity with a stop above that level. And
Yep.
it nailed it. It wasn't meant to be a blueprint, but
But
it
it
kind of
is.
turned into one. And it doesn't look like much because of the scaling here. But
Yeah.
this, if you look, I mean, this is
43.
543,
Yeah.
and we closed the day at 537. That's SPY points. That's 60 S&P,
You take that.
handles.
So let me tell you my take on that. The VWAPs there, when you're looking for that potential long above the VWAP, what talks me out of it is how I see your other key VWAPs pointing, right? So I'm
Right.
thinking if I take a long there, not only am I like already going to struggle because I have these VWAPs I'm fighting, but if I'm long and then it starts to break down, I'll easily see the short. So I've that's helped me wait for the short and then see, okay, now I'm in full VWAP alignment. Let's go. Like I'm probably on the right side of this thing at that point.
Yeah, and we had a news catalyst, right? So we
Yeah,
had a sudden shift in the psychology of the market based around a, I don't know, you call it a fundamental event, I guess a macro event is
sure.
more accurate.
Yeah,
And then this morning, what happened? Well, we gapped down. So I didn't hold my short, and I honestly did not care, because if I held my short here, we had the chance, because as I mentioned, shorting is more difficult. A lot of times we'll gap right up to there. So I'd
sure.
rather take that money and then come back in, say, okay, I shorted here, lost a little bit, shorted here, made a beautiful trade. And as I was doing a midday video, as I was mentioning it, I said, I'm using my 2-minute exit, meaning the moment it makes a new 2-minute high, that's when I get out. And my exit for this short right here
Yep.
was exited right there. And that was, hindsight says, the perfect exit.
Sure.
This isn't the perfect exit. That's
No,
that's just
it's impossible.
unobtainable.
Right.
What we're talking about is having strategies and
Yeah.
saying, does this make sense to be out? Because the momentum has been such that we have a lower high on each one of these 2-minute bars. And when it makes that higher high, and we started to see in here, the volume increases in the direction of the trend, peaks at turning points, and diminishes on the retracements, is how it typically works. And here we can see it on a 2-minute time frame.
Do you see the move at 11:30 as a second trade then? Because a lot of people will look at this and they'll say, "Okay, Brian, I get that."
Absolutely. Yeah.
But that
Yep.
okay, because they'll say, "Well, should I hold in for that
Yep.
pullback?" No, that's another trade.
I don't think so. I don't
Right.
think you hold it. You,
Because you
you,
don't
you
know
look
where
at it
that's
and
going.
say, you look at it and say, okay, would I have shorted here? No, because we still need to digest this a little bit.
Yeah, give me some
And
structure.
there we no, now I didn't short there either. As it went up to this, I did get short a little bit here,
Mhm.
and I wasn't as disciplined on that. But if I used a little bit of, once you get some momentum, so we don't have momentum in here, it's just kind of making up its mind. But as we get this bar to break these lows here, then we see a lower high, lower high, lower high on these 2-minute bars.
Yep.
And right here would have been your exit on that trade.
Yep.
And you could say, well, if I held it, I could have covered down here. Yeah, sure. But you could also have held it
And
and
gotten
been
top.
right out, but been out at break even right
Yep.
here,
Yep.
because you panicked and you let your winner move away from you. And what is this move? So this move here, let's say you even just shorted there from 515 down to,
509,
what was
510.
my, I don't know. Oh, I see why. To 512.
Yeah, I
That's
mean, look at
it's still a point, you
still a
know?
point. Yep. And that's what we're here for, catching points. I think too on the retest there where you said let it digest a little bit. Let's
Mhm.
go zoom in on that. The on the stop loss there. Yeah, right above that on the pink VWAP. I
Mhm.
think so the reason you're not short earlier, more above my head there to like that first break above and come even more to there, right there. You're not short there because that stop at that recent lower high is not enough for you. That's subjectivity because some people will see that come back down and they'll get short right away. I know from trading it for a while with you that you need a little more of a base. I call it a base or whatever you
Yeah.
want to say. Is that as simple, or I guess I may say, is that as detailed as we can be of why you shouldn't short there? You'd want to wait for more time.
Well, I look at it and say, where did it come from? It just came from 510 to 520, 521 in 1, 2, 3, 4, 5, 6, 7, 8 bars, 16 minutes.
Fast.
That's super fast.
Yeah.
And there wasn't a big surge in volume. Instead, we saw, again, volume tends to peak near, at or near the turning point. This is where the big volume came in,
Yep.
right? And then we kind of went sideways, and I was thinking, well, maybe, who knows, maybe the market's going to turn, but I'm not going to chase it here at 513, 521 when it was just 510. It can
Yep.
go without me.
Yeah.
because I know that, the bigger picture is we're still below that declining 5-day moving average. We've still got, major problems in here. And now we're looking at it and saying, we've still got, these are, if you're Joe Super Scalper, sure, you can trade these. That's not my business. That's somebody else's business.
Yeah.
But when we start to see a rally like this and we see a little higher low, what I'll do is I'll put a provisional anchor on that and say, okay, I don't want to short this while the buyers are in control from the lowest point it's traded at this year. Now, would I have shorted it here? No, because it just broke too hard. What I would look for, same thing we saw yesterday. Maybe it does this and it rallies up, even to the daily VWAP,
Yeah.
right? Let's say we
Mhm.
make it up to the daily VWAP. Um, and the VWAP from this low would look like this. So
Mhm.
we've got till 2.5 hours left in the market, 2 hours and 15 minutes. Still a lot of time for something like this to happen,
Yep.
and see that, and maybe even push up through there just to catch some greedy people who think the market's going to turn.
Mhm.
And then it comes down later in the day, starts flirting with the anchor from the low. So now we're trapped back
You
below
got
the
a base
daily.
in there. Right.
And then if it does this, I want to short right here with a stop probably right here, maybe above that high initially. But if it starts to drop quickly, in here, then I'm going to lower my stop. And we're talking about day trading, and this isn't my specialty. I'm doing it because that's what the market tells me I have to do to make money. But if we start to go like this, well, I'm going to quickly lower my stop to here. And then if we come down like this, I'll just keep lowering that stop. And if we get a real nice push lower, then I'll start to use that 2-minute exit and say, okay, I want to maximize this momentum in here. And then right there is where I'd get stopped
Cut
out,
it. Yep. Because of the
rather than
high.
using the lower high that, maybe we just start,
Right.
flushing
Because look at
hard.
all that money you'd be giving back.
Yeah. And you see that,
Equal
the
lows.
turns often come at those lows
Yep.
after a flush. So,
Yep.
that's what I would be. I'm not trying to outline a roadmap here, but this is the way my brain sees this market right now is the buyers are in control from the lowest point it ever traded this year. But that's only 25 minutes. That I can't take that seriously. That's
No.
why I call that a provisional anchor.
Right.
If it decides to hold it, and let's say we hold above the daily VWAP at the end of the day, and we run where maybe the 2-day VWAP.
Sure.
I mean, that could happen. I think it's less likely. I think this is, what's more likely. What's possible. I want to look at what's most likely, and then can I get involved in a way where if I short right here, I can control my risk right here.
Yeah.
Not if we drop from here. Let's say we had the rally up to here. I don't want to short it right here after that big drop. I want to see some consolidation. And then that tells me, okay, this is where the knives came out. This is where we had a battle between the bulls and bears.
Yep.
And if it breaks below there, we know who lost that battle.
Yep.
And we know that the average person from this low is now losing money. The average short is saying, we've got control again. Let's start slamming this thing. And, same thing just plays out over and over again. And here we're rallying maybe towards that daily VWAP. But I'm not, do I look at this as the low? It's a low,
Stay
just like,
low. Right. We'll
just
see
like
where we finish
this
the
was
day.
a
Right.
low
Well, so that leads
and
me to
that was a low.
right. If you look at the VWAP today, so real before I go to that question, futures guys get confused, Brian.
Mhm.
Should they be looking at the overnight VWAP from the 6 p.m. changeover that shows Asian session trading, or is the 9:30 VWAP today more important?
I think today that the futures VWAP is more important. So this is actually a really important concept, and it for equities people it ties in directly to should I be looking at extended hours trading for my stocks, especially now that we have a 24/5 market. Most of the time, you don't need that. It just makes your charts look awful. And so, let me just change this. So, um, this on TC2000, this is what I see.
Yeah.
So here's where you would set that anchor, which is pretty much equivalent to the futures anchor,
Hmm.
except a lot more, and this is only for, till 8 p.m. last
Okay.
night,
Okay.
and this is from 4 a.m.
Hmm.
So what happens to that 6 hours in between? It
Right.
doesn't show up. So we know that last night we had an active futures session. So the futures market, whenever we have a news catalyst, we have large volume or we have large range overnight, you want to look at the overnight stuff.
Okay.
Most of the time for your average stock, you don't need this extended hours information, because what happens is, on most stocks, what you'll see is that pink and that purple will come together almost within the first 15 minutes. They'll be almost identical.
Right.
But when we have large overnight range, you want to be aware. So
Okay.
I have both of them up during the day.
Got it.
That's what I have. And on days like this, I'll look at it and I'll start to, I'll try to explain to people that, listen, here's why you often see that if we get up to the daily VWAP, like we see here
Hmm.
in the SPY, if you look at the ES futures, we were below it. The futures VWAP looked like this. It
Sure.
actually just it looks, because I'm looking at it on a different screen, it looks
Hmm.
just like this.
Hmm.
And now it's at 18,050 on the futures. So if we run up to here, you don't want to short that level in particular, even if it does this. Instead, look at this and say, okay, now we've run the stops on the VWAP people from the cash session, and we're hitting the future session, which has more price memory. Then we want to look at it and say, okay, now it looks together. It gets confusing,
No, that's not
especially for
confusing.
new.
If they don't understand it, rewatch what he just said, everybody, because that makes total sense to me. I think we need to build an indicator, Brian, because you're the second person to talk to me about using, like, for NQ on futures, using QQQ and then comparing the two of those. So, oh, we lost your
I'm
screen
going
there, Brian.
to, yeah, I'm going to share the other screen
Okay,
actually.
cool.
So share screen and window. Here we go. Share that. So it's two. Oh, you know what? I could probably do this. Let's do this. Let's put SPY down here. Okay, so here's the SPY, and we'll just make it the very short term,
Okay.
right? So here's the pre-market low in the ES.
Yep.
Okay, the pre-market now in the SPY, if we look at the 930, there's our 930 session.
Yep.
If we look at it from the futures, let's see how that looks. Um, I'm sorry, from the post market.
Yep.
So they're kind of in the same place, except on this futures, since 1600 yesterday, that's what we're looking at here.
Yep.
That's yesterday's. And you can see, even if we use that extended hours on the SPY, you can see right in here, this is where we went above that VWAP.
Yep.
And people might have interpreted it as the buyers are taking control. That was at 9:18. This is local time. And this is where we were at 9:18 local time in the futures.
Right
We were
there.
still below it and it was
Yep.
still declining.
Oh, that's
And
a big one right there, Brian. People are going to see this and be like, oh my God, this is
yeah,
cool.
so
Yeah.
even if you're looking at the SPY, you're not, you missed that 6 hour window
Right.
of, or it's
Of
more than
price
that,
information. Yeah.
8 hour window from
Whatever it
8
is.
p.m.
Right.
to 4 a.m. or whatever they, post these sessions at.
Hmm.
So you've got to be aware on the large range nights that the futures are where, that's where the big players are, right?
Right.
They're
Might have
they're
more
they're in
information.
there doing their stuff. And if it's big volume, you'll see this difference. If we saw light volume, then it would probably look like this.
Look very similar. Interesting. I love that. That's a huge takeaway. Okay, so to trailing stops, because this was something people asked me about.
Mhm.
Why the 2 minute chart, not the 1 minute chart? And you kind of referenced it in your example before, but you are not trailing it right away. You're waiting for the move to develop. Is that a discretionary distance that you have before you allocate to say, like, hey, okay, we've moved a standard deviation away. Now I'm going to start to trail. Or hey, we have not moved yet, so it's not ready for a trail.
Yeah, I mean, I don't do standard deviation.
Okay, whatever it may be.
I just, yeah, and that's fine. I mean, I'm just, here again, here's our 2 minute chart. Let's
Yep.
let's look at this, and you would have gotten out at 509.53. Let's change that to a 1 minute chart, in that same period, and pretty much the same actually. I use a 2 minute. It's just kind of, I don't know why. Truthfully, it's what
Okay.
works well for me.
Yeah.
Sometimes it's and I also tell people, listen, if you're a little bit longer term, use a 5 minute exit.
Sure. Sure.
So, for a 5 minute exit, to me, it's too much slippage, right in here. Let's say you were using it, you would have had to, give up this whole, when you have a market this active, you would have been stopped out here at what is this price on a 5 minute stop? You would have been out at 514.80 versus over here, you would have been out at 511.80.
Okay.
3 points.
3 points. It's
Yeah.
worth it. It's worth it. See, people will be like, only 3 points. But you and me just went, 3 points, because we know that 3 points adds up over a year.
In the course of 3 minutes too, because
Yeah.
it's a difference between a 2 minute high and a 5 minute high.
Yeah. Yeah. Okay. So
But the 1 minute just seems, if I had to, verbalize, I guess the 1 minute just seems a little bit too sensitive.
okay.
That it just becomes a little bit noise, and I don't know. I started using the 2 minute years ago. I don't remember
Two's a good
when.
number. I
And
got married on the 22s. It's my number, so I'm cool with it.
all right.
Why the bar charts, Brian? Because as I watch you, I'm like, maybe I need this because I changed all my candles to black because I didn't want the
Mhm.
colors. Is that why you're on bar charts? You don't want the emotional colors? Like, what's the reasoning?
Yeah, the colors are going to skew the way you're supposed to feel. Oh, it's green, it's bullish.
Right.
No, it could be that, we gap down and we're above the open, but we're still bearish.
Right.
And we could even be below the daily VWAP. Your daily candle might be green, but we could be below the daily VWAP, and you've got this green candle. Meanwhile, we're down 3%. That's
Right.
not happening today, but those can happen. So I think that people just associate green with good and red with bad.
Sure.
And it's just price action. You shouldn't assign that emotion to it. It to me clouds your judgment. Plus, the candles are fat and they're ugly, and I see prices better this way. Years ago, I was using bars only, and then I switched to candles because everyone said, "Why don't you use candles? They look so much cleaner." So I switched to candles. I hated it, and then I said, "Why am I doing this for other people?
Right.
This is the right way to look at price action, I think." And people misuse candles when they look at dojis or they look at shooting stars or three marching soldiers, and they think that means something. On your daily chart, you see a doji. Well, what is a doji? A doji, on your daily
Indecision.
chart, it looks like this,
Yeah.
right? What does it look like on your intraday chart? It looks like this.
Right.
And I don't, I'm not going to base my decision on that. I see a lot of good trades in here throughout the day, and actually, it should have started right here.
Yeah. Yeah. I know
Um,
what you mean, though.
but anyway, so I'll look at it and say, if we're in a volatile environment, here's our daily VWAP, and I look like this. Well, I see trades in there.
I
I
was going
don't
to say, you see
care.
longs and shorts.
I don't care what happens at the end of the day. The market's closed. All the opportunity's gone. This is what matters here. This
Yeah.
is how you make money, not by going, oh, that's a doji. It must mean this. Dragonfly, whatever. I don't know. People just want simple and easy. They want these cute little names for things. They want to say, "Hey, is that a?" They'll look at the chart, and everyone will look at the chart and say, "Well, it's an inverted head and shoulders pattern. Does
Right.
that mean something?" Yeah, it means the pattern of lower highs and lower lows has been changed, and now
Right.
we have a higher low and a higher high. That's all a head and shoulders pattern is.
Right. How
And
are you going to
and
make money?
and true V bottoms don't really occur very often.
No.
So you don't see that. You typically will see, the pattern, the pattern of lower highs and lower lows is interrupted, and we have higher highs and higher lows. So when we have that, we say, okay, let's put a provisional anchor there, see how the market responds, see how it responds when it gets to this next level. And if it just seems to blow right through there, well, let's look at our futures chart. This is where the futures VWAP actually is. How does
Right.
it handle that? And then as it starts to break down like this, well, what do? I'll put a provisional VWAP here and say, okay, we're starting to see from that highest point after this rally, we're stuck below the daily VWAP. The VWAP from the low, let's just kind of extend it out a little bit. The other scenario I just made. So I want to short here. We've got protection from that VWAP off the high. We're below the daily VWAP on the cash. We're below the daily VWAP on the futures. We're in a major decline. So maybe we're going to see some weekend selling. As the phrase goes, markets don't bottom on a Friday.
Never.
So, just all this stuff put together, and I'm not going to get excited about a rally from 508 to 516.
Okay. I love it. Two more questions and I'm letting you go.
Yeah.
Off the bottom, anchor to the low. You buying that if it holds, trading it back to New York VWAP ever?
Sometimes, yeah. I mean, if I'm really bored and looking at it, and so the truth is, if I'm sitting there and I'm bored,
See, everybody, he does
and
it
I'm
too. All
seeing,
right. It's
and
not
I'm,
just me taking the board reversion trade. It's Brian too. Okay. It's not just
but
me.
here's how I would do it. And I will frame it this way. So
Okay.
there's the anchor from the low. So there's the anchor from the low.
Yeah.
I'll look at that and say, okay, do I want to buy the touch of it? No. But if I buy here as it's bouncing away from it with a stop there, and then it runs up a little bit, I'm going to take a third off there. And then I'm going to say, okay, the stop on the bounce is break even. Let's see what we get here. And then I'd probably sell another third right here because it made a lower low, even though it's still above that VWAP. And I'd save my final third to see how it handles this area up in here. So if I'm, looking at scalping against the direction of the primary trend of the day, which is below the daily VWAP, then I will look at it. But I won't buy the pullbacks. I would be a buyer here with a stop there. I'll be a buyer here with a stop there.
Is it too generous on the first trade off the VWAP to put the stop at the low? Would you not sit in it that long? Because if the low of VWAP is taken, you're like, oh God, the sellers are in. Like, because that's where I would maybe put my stop. Do you think I'm going too far?
I think when you have a market with as much range as we have here, that it's a mistake to put your stop, at this point.
Okay.
If you're buying strength away, so again, buy that higher high right here with a stop here. To me, that's my risk tolerance.
Okay.
I don't want to be, especially when this is the low that it's traded at this year. This is the low of the year. So I don't want to see that, because if we hit that low of the year, we're probably going to just continue going lower.
But what if it double taps your bottom there, takes you out and then goes? Do you get back in?
So if it did something like this,
yes, not even that low. Let's just say it pumped lower, took out your stop, and then came back in that first leg down.
I probably wouldn't get back involved until I saw this VWAP from where I got stopped out, tested, and then kind of do this. Then I'd say, okay, well, I can buy here with a stop there.
I like that. Okay, so you will take another jab at it if it's set back up, but that's why you're willing to go with that tighter stop.
Yeah, but I'm not going to take it out of frustration. No, I'm not going to take that reversal. I'm going to say, okay, let's see if we can get a little bit of structure here. Is it going to do this, or is it going to do this and hold and create a little level where I can identify risk with this higher low, get involved here with a stop below there.
Love it. Brian, I think you're going to melt some people's minds with your take on the technical analysis terminology and stuff, but I think it's a good thing. We got to break those traditional sayings that are not always true, right? We got to get people believing price always pays, not some of the other things that they say. But this has been great, man. I really, really appreciate it. Everybody, we're going to respect Brian's time. Buy the book. Join the Alpha Trends Discord. I will have links to both of those in the description. Brian, part 3 in the books. We'll have you back for a part 4, I'm sure. Yeah.
I'm sure you'll have great questions as always, Austin. My pleasure to do it. And we've got a great environment for really, for these are like scalping techniques. This is, and it's a great environment for learning, because if you're looking at a weekly chart, you got to wait 3 years for the anchor from 3 years ago. You got to wait 6 months before we hit that. Here we can hit the anchor and show the anchor off of that low 30 minutes ago, and the same concepts apply to all time frames.
100%. Brian, thank you. Listeners, thank you as always. Make sure you guys are subscribed. Check the links in the description. Connect with Brian. And I'll also link to our other 2 episodes. If you want to go back, we do Brian's story. We do all that stuff in the past. As you can see, we didn't need to touch that today. So thanks, everybody. Thank you, Brian. Appreciate you.